This is the Friday, July 18th, 2014 version of the Market Plus segment. Joining us now is Sue Martin. Sue, welcome back.
Thank you, Mike.
We're glad to have you back with us, and as promised, I think we'll start this segment right off with a look at the lean hog markets. We saw a little bit of a pullback this week. We're still dealing with the PED. Can you talk to us about where you see this market moving in the next week to month or so?
Well, I think that for the moment, hogs do have a seasonal tendency to put highs in around July 8th or 9th and slip back. Maybe slip back into August, but I think we'll find a low here fairly early in August. And then there's an old saying, and we'll see how it goes, but the old saying goes higher highs in September, higher highs October and December. So we'll see if that occurs this year, but it sure seems like we have the fundamental base for it. What's really weighing on the hog market is the traders are all talking about how the consumer is resisting higher pork prices, which really surprises me, because if he's resisting higher pork prices, you would think he'd be doing that on the beef too. And he's not, or not in a big way. So I think what we're seeing is a market that temporarily is going in for a little bit of a correction. August hogs could slip back towards 126, maybe 127, 125, right in there. And then I think they should catch, and we'll see if they can't start to renew themselves. The fall, we should have some really tight supplies of hog numbers coming in the fall. Slaughter this past week was down 9%, although weights went up 13.5 pounds over a year ago. You know, cheap corn is very helpful in this environment, and so the producer's trying to, basically feed the hogs that he does have heavier to try to make up for some of his losses. But come fall, we should still see the numbers very tight. And I would think that October pigs should do quite well, and maybe we see a nice rally back in the October and December hogs. And
you'd think, as you mentioned on the show, if fat cattle can get up to that 160, 162 range, that should provide some support for pork. Hog
you
markets.
Would think, because you've got some expansion starting in the poultry industry, which I'm amazed it took this long, but they had some issues too. But in the hog industry, you look at like Japan's now dealing with PED virus too, and they're our largest customer. And all of a sudden you think, oh, they lost 1.1 million pigs. They're going to be coming back for more pork. But the Netherlands, Denmark, and Mexico, other countries will probably stand to get some of that business over us. But on the same token, and here's another thing, you look at Russia and the problems they're having and the sanctions we've stuck on them, well, their economy could really start to slow, and probably already has. And then the Ukraine, same thing. Neither one's going to fare very well out of this for the moment. But as their currencies fall, their products seem to be doing quite, demand will go their way. But they are big pork users, and so maybe Russia all of a sudden has to open the door for more pork.
All right. Well, we'll have to keep an eye on that through this fall. Now, we do have a couple of questions from our Twitter followers. Dave in Howard, South Dakota is curious, will old crop SEP corn get above $4 or move sideways? What's a selling opportunity for folks still hanging on to that old crop corn?
Well, I think as corn on the futures gets up around $4, we even seen it this week on the December, well, and on the SEP too, you get close to $4. You got to like $3.95 3/4, $3.96. And they took advantage of it and sold it. The market might, at some point here, I'm looking for the market to find a spot where it catches, gives us a little rally, and it's already tried one, and now we're stepping back, and of course before the week was done, we came down and made new lows for the whole move. There is some timing coming up here fairly soon that I had told my subscribers would be a low. And a low can be move up and react, and then you come back down, or it can just flat be a bottom. I don't know if I could say it's going to be the bottom for the moment, but the one thing I did notice was on July corn, before it expired, year in, year out, nothing but a July contract, coming off of the highs of 829, the all-time high for that contract, wave 4, that's a major wave 4, was 391, and we went there right into the expiration, went to 390. So that says next year's July contract probably is going to have, it can come down and look at that area, but should have some very good support in that level. Now, if it starts to exceed that, then we're going to start thinking about a wave 5 or something. But, you know, this crop isn't in yet. You know, we've got some heat out to the southwest. It's dry in Ohio, parts of Indiana, Kentucky, Tennessee, North Carolina. The only thing is we don't have heat, so to speak, in a big way. But that crop is shallow-rooted in that area. If that heat started, or dryness started moving more to the north and west a little bit, why, you could even encompass more of Indiana and into Illinois. All of a sudden, it's the eastern corn belt that we're worried about more than us, and it wouldn't take much to stress those crops. Yields might not end up quite as good as you think. It looks great now, but who knows? And we're not into El Nino yet.
That's right. That's still coming here towards the end of this month into August. Is that
That's right.
still the plan?
Yeah, but it'll be a moderate to weak one from what I'm hearing.
Okay. All right. Now, we've got a question from Jeremy in Oneida, South Dakota, and you touched on it here at the corn market. His question is, what does it take for a market to make a low, and how close are we on the grains? As you mentioned corn, where do you see us on the wheat side?
Well, on the wheat, you know, we've come through some pretty good, you know, numbers as well for support. And, you know, wheat could have a little bit more on the downside, another, I would say, 20, 30 cents. But, you know, you look at the wheat, and the wheat might catch and start into a range for a little bit. Corn's more guilty of that, I think, than wheat is. But world demand, the one thing we got to keep in mind is that, first off, China is expecting to be a bigger buyer this year of wheat. And you look at India, and their monsoonal rains have not been up to speed and have been they were delayed at first, and then they've ran subpar. So, you know, India's wheat crop may not come out quite like what they were hoping for. You know, it's just, again, it's the weather percolating around the world. We have to remember, you put your bottoms in on the most negative news, like there's never going to be another good day, and you put your tops in when things couldn't look better. And it's like the market has a way of pricing it in. It's when the story becomes believable on either end that the markets will reverse because everybody's on board.
All right. Now, you talked broadly about the markets there, and our final question, I think, builds on that. Mary Jo in Iowa is curious, how do people so far away from the crop fields, whether you're in Wall Street, Chicago, China, Brazil, or Mexico, how do they know what's happening in the fields? Can you explain a little bit the market mechanics as to how that all functions?
Well, part of it is they utilize services and that now are able to have the capability. I mean, it's not like the old days where we went out and did all these crop tours. I mean, we still have the Pro Farmer Crop Tour, but you don't see a lot of the groups out anymore that you used to. And it's because of satellite imagery that a lot of these services, be it whether it's Landworth or whoever, they're able to look at the maps. And even out of NOAA, you'll get these maps. And actually, some of these maps are not really looking as green as what the USDA would have you to believe on crop condition ratings. Regardless, we have what we have, and a lot of these traders look to these services for guidance. They look to the USDA for the fundamental side of the equation, whether they agree or not. They look to that, and it's kind of like listening to mom and dad. You know, you got to listen whether you want to or not. And then in the meantime, they also look at technicals. And, you know, I think you have to walk a walk. It's got to be half technical, half fundamental, because technicals or the charts will eventually keep you in the mode of the trend, and the fundamentals are your trend eventually. I mean, I should say the technicals catch your turns more times than not, and the fundamentals is the guidance of the direction of the trend, and the trend is your friend. And they will go for that until they see something that psychologically says, you're wrong, things are not what you think. And this year, psychology is playing a big part. We have a huge, if you look at most any market, we've had a lot of markets that have rallied good in the first 5 months of this year. And then they've all kind of just melted away. And even coffee has done this. So it's like there's something out there, an environment of where there's just no matter what, they want to be bearish. You know, they've been bearish since last November, and they're still bearish. And now they're looking more right. And so that's kind of how I think they go about it.
All right. Well, Sue, thanks for taking the time to be with us this weekend. We really appreciate it. Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis straight to you. Thanks for watching, and have a great week.